Hi guys, Josh Olfert back with another video, and today I want to talk to you guys about a new trend in the world of investing. Free trading, commission-free trading. You know, for me, this is completely new, and for everybody this is completely new. So I want to tell you guys, how do these companies actually make money? How is it that companies like Robinhood or Webull or Wealthsimple are able to make money by allowing you to trade for free? So it's time to think like an investor. So first things first, guys, if you're enjoying this channel, please hit that like button, subscribe, and turn on post notifications so you can see more videos just like this one where we're gonna talk all about investing and finance and real estate and all these different things where you can learn how to build and create wealth. So let's talk a little bit more about these free trading platforms. Earlier in 2019, about a year ago, a lot of different companies, Charles Schwab, E-Trade, in Canada we have things like Wealthsimple, and we have things like Webull emerging in the States. All of them, pretty much overnight within 1 week, decided to follow Robinhood and all these other different businesses and go to completely commission-free trading, which is nuts. It's absolutely crazy. I remember when I started trading back in 2010 or 11, I was getting my feet wet in the markets. What I found was, you know, if I started to add up all the trading fees I was going to incur to try to become an investor, you know, for me, the lowest cost option I could find was probably $6 a trade, somewhere in that area. So that begins to chip away at your account over time, especially if you have a small amount of money. I was starting with, you know, $1,000 or $2,000 and seeing what I could do with that. And what I found was that if you get too active, tons of your return, maybe 3 or 4% of your return is going to get eaten up by trading costs, which is crazy in a world where you're happy to get 7 or 8 or 9 or 10% per year. And here's another tangent. If you think about investing in the proper way, right? There's kind of the really amateur way where people start, and the way I started is you put money in an account and you just try to find the next hot thing and see if you can ride that and try to make a little bit of money on a trade, on a speculative trade. But if you're really investing properly, the way that professionals invest, you're building a portfolio of not just 1 or 2 companies. You're, you know, mixing in some what we call ETFs or some mutual funds or some managed products, and then you're taking some trades on some stocks. You're having a more diverse portfolio. It's not like you just have one thing. Now, if you're building a diversified portfolio of maybe 10 stocks and 2 funds, something like that, each one of those different holdings is going to cost you money to trade on, right? If you want to build a portfolio of 10 things and each of those things is $5 a trade, it's going to be $50 just to start. So right there and then, if you're just starting with $1,000, 5% of your first year's return is just going to go buying those stocks and trading fees. And now if you're managing your money like a professional, you're also doing what's called rebalancing. If one stock takes off and another one starts to, you know, lag a little bit, throughout the year you want to sell a little bit of the one that's winning and buy a little of the one that's losing. So you're rebalancing your portfolio. This is what professional investors do. Also, every time you receive dividends or payments from your companies or the businesses you own, you're going to want to reinvest those too. So all of those different activities require trading commissions. It requires you to pay fees. And if you have $1,000 or $5,000 or $10,000, the odds that you're going to end up paying more in trading fees than you would at some mutual fund or ETF are super high. It's pretty obvious that buying your own stocks and managing your own portfolio isn't cost effective unless you have 25 or 30 or 50,000 plus to invest. But anyways, back to the original point. Anyways, guys, now trading is free. That's really the big topic of discussion here, is that we do not have to soak those fees anymore. We don't have to take on those commissions to run our portfolios ourselves if we want to do it ourselves. That's really the big point. Now, that leads everyone to ask, and you're probably asking, how do these companies make money if they are not charging for commissions whatsoever? How is it that they're profitable, right? They have salaries to pay. They have owners and shareholders and all sorts of people who need to make money from the venture. How are they making the money? Well, this leads me to one of my favorite ideas that I've heard on business and finance, and it's the idea that if the product is free, you are the product, right? So if you're using a product that's free, that means that somewhere you are the one that's being sold. So let's think of it this way. We all use Facebook or Instagram or Twitter or these different social networks. They're tremendously valuable and tremendously cool, but they're completely free for us to use. Why is that? Google, for instance, completely free for us to use, but we love it. It has a ton of value. The reason is because you are the product. At the end of the day, Instagram, Twitter, Facebook, Google, they're not concerned about you necessarily in terms of their revenue. They are trying to take in their revenue from advertisers, right? It is your eyeballs that are the product for advertisers in Google and Facebook. So that's one way to think about this. Now, everybody knows that these platforms have become free, like Robinhood is completely free trading. But what don't we know about how it is that they're making their money? You know, we talk about how if the product is free, you are the product. Is this the case with Robinhood? Well, the answer is yes, absolutely. So there's three main ways that Robinhood and these free trading platforms make money off of us. The first one is interest on margin accounts. The second one is foreign exchange, charging fees to convert currencies. But lastly, and for sure the most controversial, is what's called selling your order flow. Now, let's talk about that for a second. What this really means is that Robinhood or these free trading companies are taking your data, they are taking your actions in real time. You know, you're buying Nike stock or you're selling Apple, whatever it is. They're taking that data and they're selling it off to a hedge fund or a high frequency trading firm. And if you're not sure what that is, a high frequency trading firm is a really fascinating concept. They've come onto the scene over the last decade or two. And what they are is they are investment companies that are literally trying to become the fastest player in the markets. They're using fiber optic cables. They're investing in super quick infrastructure, lightning fast computers. And in some cases, they're even just trying to move themselves physically closer to the exchange, because what they are doing day in and day out is making lightning fast purchases and sales on the stock market. So to give you guys an example of the enormity of these high frequency trading firms and how much impact they have, the seconds matter so much to them, these milliseconds. They're trying to beat one another. They're trying to be as competitive as possible to get their data to the exchanges, to the stock exchanges where these transactions happen. In one instance, you have this crazy scenario where a company, Spread Networks, realizes that the cables, the data, the electric cables running between, you know, Chicago and New York isn't perfectly straight. And if they were to straighten it out, it could add an extra 3 milliseconds. It could shave off of 3 milliseconds of the time it takes to get data to the exchange. So what did they do? They invested hundreds of millions of dollars to wreck up freeways and repave them and to bore through mountains to get a cable perfectly from Chicago to New York in a straight line to shave 3 milliseconds. And the reality here is that if they spent hundreds of millions of dollars to do that, it was worth it for them to get those 3 milliseconds. So that just gives you an example, an understanding of how quick and how crazy these firms in this industry is in being faster. So what Robinhood is doing in order to earn money is they're taking your data, they're taking your orders that you enter into your brokerage account, and they are selling that data to these firms so that these firms can quickly, at light speed, go and purchase that stock and sell it to you at a higher price. Their value proposition is that they're providing what we call liquidity. They're making it easier for you to buy and sell, but in reality what this means is your data is being sold to a firm that's marking up the investment, that's gonna make the price a little bit higher for you. Now, the really funny thing about selling order flow is it was actually originated by a guy named Bernie Madoff. He was the first person to popularize it. And you know anything about finance, you know Bernie Madoff is in jail for a life sentence because he essentially created the world's largest Ponzi scheme in the modern era. But anyways, that's for another day. So this is something you need to understand, is that when you use Robinhood or you use free trading platforms, sure, you're not paying the $4, $5, $6 per trade, but you are paying in other ways. And the next way you pay is through foreign exchange conversion. If you live in a country and you want to invest in businesses elsewhere, overseas or in a different country for whatever reason, you're gonna have to convert to that country's currency, right? If I'm a Canadian and I wanna buy a portfolio of American companies, that money has to get converted into US dollars to buy those businesses. Every time one of those businesses pays me a dividend, or if I wanna sell one of those businesses, one of those stocks, I am going to have to pay that currency exchange fee. And this is one of the major ways these platforms make money, because that fee can be 1.5% to 2%. So if you have $50,000 or let's say $100,000 invested, and you know you want to convert into a different currency, you might end up soaking an extra $1,000 or $2,000 worth of currency exchange fees. So it's not exactly free trading by any means, it's just fees that you can't see. Now, the last way they make money off of you is what's called margin accounts. And what margin is, it's actually very exciting. If you have $10,000 or $25,000 to invest, sure, that's great, and you can purchase shares of companies and get great returns on that. But what if you want to accelerate that? What if you want to, accelerate the growth of your account? You could take a loan from somebody else and do what's called leveraged investing. You could take someone else's money, add it to yours, and now you could get the gain on all of that, right? There's a huge downside here, which is if your investments actually lose or they go down in value, now you're gonna owe that person. You're gonna owe whoever lent you the money. Now, that's what Robinhood does. They provide margin accounts. They provide you money that you can borrow, and they say, oh, go ahead, do whatever you want with it, but if you lose it, we're gonna come after you and we're gonna make sure that you pay us back. So it's kind of like these high rollers at the casinos who have lines of credit with the casino, and they have these accounts open they can go and gamble on. And if they lose, they're in real trouble, but if they win, they can pay it back. So these are the three ways that these free trading platforms do make money off of us. They sell your order flow, and that's gonna increase the prices that you pay on your investments. And by the way, Robinhood doesn't disclose how much they sell it for or what the price impact is. So that's something to think about. Also, you're gonna pay foreign exchange fees if you wanna invest in a different country. And lastly, if you wanna use margin, you wanna use leverage to accelerate your growth, you're gonna pay interest. You're gonna pay anywhere in the range of 3 to 5% for that kind of thing. So anyways, guys, that's more about these free trading platforms, talking about how is it they make their money, because they are making their money. So hopefully you learned a little bit here, and if you're deciding to do it yourself and invest on your own, you should know these things. You should really understand what it is that you're paying at the end of the day, and that if the product is free, you are the product. So anyways, guys, thanks so much for watching this. Like I said before, if you're enjoying these videos, please hit that like button, subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.